Tesla stock got hit with the three-piece combo today, absolutely punched in the face. Three pieces of bad news that sent Tesla stock lower by 7% at the worst point of the day today, still down over 3% at the time of recording this video. Let's just say today is a rough day for Tesla stock investors. But there was actually some really good news as well, and we'll start with the good news because why not? Now, this news did literally nothing for Tesla stock today. It didn't even react at all. Tesla has increased, that's a new term that we haven't heard lately, the price of the Model 3 long range in the US by $1,000 to $46,990. This should be good for margins and shows that demand is probably better than where a lot of people think it is. Considering that, it's actually surprising Tesla stock did not react at all to this, even before some of your really bad news came out today, even pre-market. Tesla stock was not moving at all. So here's the first piece of bad news. Piper Sandler has cut its Tesla price target to $225 per share from $295, citing, quote, an aging product lineup, which is interesting considering Tesla just launched the refreshed Model 3. They're expected to launch the refreshed Model Y at some point in 2024, and the Cybertruck has started actually being delivered. This could have been a valid argument maybe in 2023, but at this point, I think Tesla is stepping up their game as far as refreshing their models. And ultimately, I think Piper Sandler is going to be wrong here. They also trimmed their 2024 delivery estimate by about 11.5% to 1.93 million units, which is interesting because we just had the best January in Tesla's history. Any of the recent delivery numbers we have gotten out of Europe or insurance registrations out of China, none of that signals that Tesla's demand is actually slowing down. In fact, we've seen records being shattered almost everywhere. China was close to setting a new record, but not quite there. But Europe, records were smashed all over the place. Unless Piper Sandler is expecting some big weakening in US demand, I don't understand where these estimates are really coming from. I mean, Piper Sandler's estimate for deliveries in 2024 is now at 7%. Just 7%. That's almost laughable, okay? I get 15%. That's a pretty reasonable estimate, but 7%? Yeah, that's kind of insane. The second punch in the face that Tesla received today was from the German software company SAP. They say they will no longer source its company cars from Tesla due to unpunctual deliveries and price fluctuations. The SAP fleet manager said, quote, Tesla's price fluctuations are more than those of other manufacturers, which makes planning more difficult and poses a higher risk for the company. Now, I don't think this is super bad news, but it seems like markets did for whatever reason. Maybe I'm missing something, but this does not look that impactful. I think Piper Sandler probably had the bigger effect on Tesla stock today. Last but not least, the third punch in the face that Tesla stock received today is 10-year treasuries rising by 13 basis points. This is because it looks like service inflation is picking up again. You can see at 10 o'clock in the morning today, we got ISM Services PMI. Now, the headline number did not come in as hot as maybe it could have. It still came in hotter than expectations. Expectations were for 52. You came in at 53.4. But when you actually dig into the report, that's where things start to look ugly. So everything came in higher than expected. Besides business activity came in at 55.8, the same as last month, and you were actually expected to rise to 57. So ISM Services business activity did miss expectations. Employment beat expectations. New orders beat expectations. But what really is causing bonds to see a big jump today in yield is ISM Services prices. This beat by a long shot. You were expecting 56.5. You came in at 64. Huh? That's like a rug pull in and of itself. Right? You don't want to see inflation in services. That's a problem. So what happened today? the odds that we get 5 rate cuts decreased by about 2%, and the odds that we get 4 rate cuts increased by about 5%. Markets did also price out a little bit more the first rate cut. So for May, you're still pricing in the first rate cut with 57.9% odds, but yesterday it was 59.9%. Yesterday, the odds of a pause, so no rate cut in March, no rate cut in May, was 56.8%. Today it's 33.0%. This is a big problem when a lot of stocks are trading off of 5 or 6 rate cuts. That's probably not going to happen at this point. I think investors need to be fully braced for and prepared for 1 or 2 rate cuts in 2024 and how that could affect Tesla stock and the broader markets. But that's really a topic for the next video. Based on this data, you can see the Russell 2000 is down over 1% today, whereas the S&P 500 is down about 0.1%. So the Russell is 10x underperforming the S&P 500. Tesla is grouped in the interest rate sensitive category, rightfully so. Tesla is very interest rate sensitive, so the stock got punched in the face based on this data. Option activity so far on the day from hedge funds and institutions is a little on the high side as far as total orders. You have seen 1,017 individual orders totaling $242.15 million with a positive order value of 51%. So neutral overall, but a lot of orders going in, which I find interesting. Now, if you take a look at the open interest for this Friday's expiration of February 9th, you could see calls are 61.67% of open interest and puts are 38.33% of open interest. So there does look to be a lot more bullish positioning in Tesla stock for this week than bearish positioning, but that does not necessarily mean Tesla stock is going to do well. The next big catalyst we're going to have is weekly insurance registration numbers that will come out of China tomorrow morning, and that's likely what Tesla stock will be reacting to. Here on the day today, including hedge funds, institutions, retail investors, money managers, your aunt, your uncle out there trading Tesla stock, including everyone. You have volume today of 52.48% to the call side, 47.52% to the put side, so still positive there by a margin of about 5%. Shorting activity seems to be picking up in Tesla stock as well today, with the cost to borrow max back at about 10%. As you know, cost to borrow fees being 10% on Tesla is insane, especially as Tesla is trading at, the lowest levels it's been since May of 2023, so almost a year now, almost a new 52-week low. When the cost of borrow fees are higher, that means there's more demand to short Tesla stock. So I think it's pretty safe to say that is also having a negative effect on Tesla stock today. Google Trends data for the Tesla lineup shows a slight deceleration again for the Model X, the Cybertruck, but a slight acceleration for the Model 3 and a plateauing of the Model Y, which all of this is pretty typical for the start of a new year. Tesla is now running 600 different ads via Google. It looks like what they talked about on the earnings call, really getting out there and advertising, they're starting to do a lot more of that. And it looks like a lot of these ads now could be actually video ads on Google as well as potentially YouTube as well. We were not seeing any video ads like this the last time around, and now you're seeing quite a few of them. Now Tesla is also advertising a lot more in Japan and even in China as well. So pretty interesting they're taking this route, and you can even see they're doing some TikTok ads, some Reels ads. Look at these short form ads they're doing, right? Look at this. You can see, look at that. Look at that short form ad. Look at that TikTok ad. I mean, maybe it's an effective way to reach a new demographic. And this one is for a lease on the, I believe it said the Model Y for $379 a month. So pretty interesting. Tesla's definitely taking the route of trying to advertise more. That could mean maybe less price cuts, especially in important markets like the US and China. As you can see here, global inventory numbers for the Model Y continuing to fall, which is great news. Inventory was starting to worry me a little bit because that's either meaning Tesla's producing too many vehicles or they're not selling enough vehicles, or both. So that's starting to fall. That's great news. The Model X inventories rising by about 200 overnight. Model 3 continuing to fall basically every single day by at least a couple vehicles. The Model S increasing by about 20 overnight. But I mean, inventory numbers for all three of these models besides the Model Y are still at some of your multi-year lows. Your latest AI investor sentiment survey that came out last Thursday, in case you guys missed it, showed a big increase in bullish investors from 39.3% to 49.1%. Neutral investors dropped as well quite a bit from 34.6% to 26.4%. And bearish investors dropped from 26.1% to 24.5%. We will get a new AI investor sentiment survey that will come out on Thursday. Going to be an interesting one. If we continue to see the bulls rise here, that could be an anecdotal sign that maybe markets are feeling a little bit toppy. Tesla is now officially allowing free FSD transfers in the US, Canada, and Mexico if you take delivery of your new Tesla Model S, X, Y by March 31st, 2024. Also, the new Model 3 now qualifies for free lifetime supercharging transfer and the FSD transfer. Also, if you have a vehicle in backlog right now, that is also eligible for the FSD transfer. And again, I want to point out expectations are super low for Tesla right now. So if Tesla can advertise more, if they can allow people to transfer FSD, do little incentives in China, like little rebates that really shouldn't hurt margins all too much, that is going to be great news for Tesla stock. In other words, if Tesla can beat the estimates for deliveries, come in at even 2 million at this point, would be better than what Piper Sandler believes, and keep margins where they are, if not improve them, well, that's going to mean good things for Tesla stock investors. Australia has proposed new vehicle emission reduction targets effective January 1st, 2025. Automakers must sell enough zero-emission cars or buy emission credits from other car makers like Tesla, BYD, etc., which have met the targets. And apparently, the 2025 Porsche Taycan charges from 8% to 80% in just 16 minutes. UK has now sold its 1 millionth battery electric vehicle in January. Rivian will unveil its next generation R2 EV platform on March 7th. This is the platform that will enable lower cost vehicles, according to the company. And Tesla brought the matte black Cybertruck to the World of Wheels show in Kansas City, and it looks like quite a few people are just captivated by the product. For a lot of these people, it is the first time ever seeing one of these in picture or in person. Dan Ives says if the US government is fine and backs Musk, so will Tesla shareholders. This is in reference to the Wall Street Journal's drug article claiming that Elon is on drugs. Hertz has paused plans to buy tens of thousands of EVs from Polestar this year, the head of the electric vehicle brand said. In 2022, Hertz agreed to buy 65,000 Polestar cars over 5 years in a deal. Minnesota has introduced a $2,500 EV rebate for new electric vehicles and a $600 rebate for used EVs. New Hampshire's Dartmouth College will transfer over half of its campus security fleet to Tesla Model Ys. Percent of stocks above their 50-day moving average could be sending a big warning signal to our markets. Now, with about 47% of stocks above their 50-day moving average, considering this huge rally we've had in the markets over the past 3 or 4 months, the average stock is not participating. The percent of stocks above their 50-day moving average today is down 6%. So 6% of the S&P dropped under its 50-day moving average today. That's actually insane. That's a drop of 10.82% of the total number. You hit a high on December 28th 2023, so as we were starting 2024, with 86% of stocks above their 50-day moving average. That was a healthy market. That was a broad-based rally we were seeing in our markets. Now, what's happened? You're more than halfway to the lows that you were at in October and November when you hit lows roughly around 20. You're halfway there. You're at 47, literally halfway there. But what's happened? The S&P 500 is, within $2 away from a new all-time high. This is a big problem and a warning sign that we will talk about in the next video. Here on the day today, TLT is down by 2%. Not good for your regional banks that already have a lot of unrealized losses in the bond market. Bonds losing more value today. It's not great. 2% today, which was followed by over 2% decline, 2.21% decline in TLT on Friday. The dollar is up 0.63% as well. And what's actually interesting here, very fascinating, okay? Another big warning signal. The dollar has been going basically straight up ever since December 28th. At the same point, you peaked out on the percentage of stocks above their 50-day moving average. The dollar's been rising. What happens to markets when the dollar rises? Stocks fall. But the markets have not fell. That's what's so interesting here. Even take a look at the last rally we've seen in the dollar, right? It was coinciding, the low on the dollar, with the high of the markets in mid-July. What happened? The dollar started to rise, and the dollar proceeded to rise from about 99.58 all the way to about 107. And what happened in that time period is the S&P 500 fell about 10.5% from mid-July down to the late October lows. But what's happened now is you've seen the dollar go from about 100 to 104.50, and you haven't seen any give back in the SPY. This could have a lot of catching up to do to the downside. This meaning the S&P 500. If AI gives out, I'll say at this point, stocks are in a very, very bad position for a sharp correction. But again, we'll go over more of this in the next video. Good news when you're looking at Tesla on the charts on a more technical basis, you flushed down today. You broke under your 180 support. Now, your low that you have seen recently was set back here the day after earnings, technically. The first day the markets reacted to Tesla's last earnings, when Tesla dropped 12.13% on January 25th. You hit a low of $180.06 per share. You did not break under 180. Today you did. You flushed all the way down to 175. But what happened? The buyers stepped in the 170s, drove the stock all the way back up to a high of the day today at almost $185 per share. You're currently at $181.73 per share. But this is confirming that massive demand we see in that 170 range. As long as we don't see the markets collapse from here, or more bad inflationary data or price cuts in the US or China, you should see this serve as a shorter term bottom for Tesla. Now, I know what I just said kind of flies against each other, right? If I think the S&P needs to fall based on some of the statistics that we're seeing, some of these charts and the data that's happening in our markets, but I'm saying Tesla could bottom here, doesn't that kind of fly in the face of each other, right? Shouldn't Tesla fall if the markets fall? Tesla stock has fallen almost 30% since the start of this year in a little over a month. Tesla does not necessarily need to fall if the markets fall from here. Tesla has already seen its carnage. Let me know what you think about all of this information down below in the comment section. Hit the like button as well as subscribe to the channel. I did have to talk a lot quieter here in today's video because I do not want to wake the almost 9-month-old beast that is sleeping. So thank you guys for the patience, and hopefully you guys enjoy a lower tone video for a depressing kind of day. I think it fits the mood pretty well, but nonetheless, guys, hit the like button, subscribe to the channel. If you guys want to join the trading community, check out that link down below in the description of this video as well. You guys have a great rest of your day, and I will see you in the next one.